Alrighty, Doc here. TGIF, thank goodness it's Friday. We're happy as clams in the mud. Yes, indeed, it's Friday. And what else can I say about that? Just the whole idea of it's the end of the week. Looking forward to some good times. We're having some good temperatures here for this time of the year. We're going to almost hit like, let's see, what is it? So 32 degrees. It's going to hit like 21, 22 Celsius today. Or not today, tomorrow. Which is even better since there's no markets. I live for the days that there are no markets because, believe me, when there's a market on, I have a hard time not paying attention. Anyway, that's what we have to say about that. Let's open up Dukascopy and see who is here. Welcome to my neighborhood. Will you be my trading friend? Indeed. All right. Nope, don't see anything on the chat line so far. That's pretty cool and pretty sad at the same time because I do love looking at new ideas and answering questions and learning new concepts and or not concepts but possible new trades. You know, that's what it really comes down to is having the opportunity to make some new types of positions, put positions on, especially if they have options. If they have options, oh, I'm in Fat City. Yeah, definitely Fat City there. All right, so let's see what we got going on. As you can see on J4X, oh, yes, indeed, you can see that on J4X, and you can see at the same time, let's close that. What is that? That's the day index thing. Let's close that and just move it over to, let's go to Chicago Quant. Where's that at? Right there. There we are there, and let's get that fact check spreadsheet up. At the same time, you can see the Swiss. There it is, the Swiss. And let's get our, there it is. So you can see a little pushing up, but we went through the sell there yesterday, even with it going up in value. And let's see what J4X is showing. It's showing the same type of confusion and so forth, just that we are. See how we're seeing that confusion here? We're in a daily sell, we're in a weekly buy, and we got a red and a green. We got a red the day before, and the day before that, it's a zero. It is no color at all. And you can see here we have two reds and then a green. You can see this thing's been over it, so it's still in the buy on the J4X on the daily. Yes, yeah, on the Swiss itself. And so that is the action we're seeing there, which says usually, you know, the dollar's kind of firm. To me, I had a question. Someone sent me a question a couple hours, like an hour ago. They were looking at the interest rate product. One of the old traders, who I'm like a child to in age, you know, and he's in his 80s, and he was like XLF. You know, that's the, I think that's the ETF for the financials and so forth. And he said, you know, it's all flattened out. I don't know how to read it for the interest rates. It doesn't make sense. And I said, my first response was, it's window dressing. Okay, and he knows better than I. It's window dressing time of the year. So why expect anything to look half decent over these last 6 weeks? It's going to be all kinds of crazy. And then second of all, quantitative easing forever until it's not. That was my other answer to him. And then I sent him a nice chart. Matter of fact, let's show you what we're talking about even, just for the fun of it, since it's a financial. And at one time, back in prehistoric times, you could actually look at financials and try to deal with the pairs trades through the financials. You looked at the way the major banks were trading and the major banks in that particular country were trading, and then you would be like, maybe I want to be long some of that currency, or I'd want to be short some of that currency. In this era, that's back in the dinosaur days of financial trading when, or just trading, when central banks were not the major player every minute, hour, and day of the week. Now they are in the marketplace 24/7, even on weekends, just rocking and a rolling, doing their thing. And there it is right there. That's the XLF. Let's move it over here like that. And that's a financial. And they were like, how do we read that? Excuse me. A little sneezing going on here. Yeah, so in the dinosaur days, back in the prehistorics, we would pay attention to something like this, trying to figure out maybe we shouldn't be long dollars, or maybe we should be long dollars. In this era, it's what the Fed wants, what the Fed gets. And the Fed and the central banks want a trading range So you don't look at the ETF of the financials, which the XLF has, like, Citibank and Deutsche Bank and all those other banks and that type of thing. So let's just close that. But yeah, I just thought I'd show you that. End result is it's trying to pop up, and I'm not even going to try to analyze it, because that's the old times when people paid attention to fundamentals, which obviously has not much relevancy of what we used to, what we do today. And let's go back over to the currencies, and we'll go back to the Swiss, and you can see it's just playing with what the Fed wants and the central banks, and that is the top end of the range. They want it to be stable. Quantitative easing is created to make things stable. It's almost like Logan's Run or Soylent Green. It's like, and then when you get to be too old, you'll just go to this nice room, take some medicines, and never wake up again. And that's pretty much the way trading is nowadays. At least to us old dinosaurs who used to have to trade through fundamentals. Matter of fact, today, what do we have? We have a biggie coming out today. And in less than an hour, we have the CPI. I think it's the CPI. Let's just take a look at it on, let's put the, let's see, where do we go? Let's see, do I go here? Yeah, there we go. Oh, no, he responded back. Let's see what he had to say. Thanks. That was his answer. Thanks. Let's see. I'll stick with the TBT. It's a professional market and easier to read. Thanks. So as a second response back. Yeah, TBT is it's a ETF of bonds itself, not the stocks and the banks, the bank stocks themselves, and it's you're following the bonds, which is, to me, is not much of a difference, since quantitative easing controls everything. But that's all right. It's just the way it goes. No subject. That cream cheese shortage you heard about? Cyber attacks played a part. Another message from him. Okay. All right. Oh, we got a trailer he wants canceled. Let's see. Who is this? Okay, I'll respond to Robin there. Okay. Okay. Let's see, where's that at? Okay. Where's the letter K? Let me turn a light on here. I got the computer screen's making all the action there. K. Where's K on the keyboard? There it is. Okay. And so, yeah, that's pretty much the end of it, in the sense of, okay, the dollar is going up in value basically against everybody right now, or against the Swiss in particular. And you can see our sell has not come out of its sell yet. I guess it has to bust up into here. At the same time, you can see the weekly is turning up really hard there. So, all right, we're done beating up on that. Let's jump over to the euro and see how Mr. and Mrs. Euro are doing this morning. We did see them playing, at one point, it looked like they were playing with the daily sell. They were getting very close, but you can see here it's just, I mean, look at the number. I mean, what is that number? 0.00016. That's how tight that number is. Whereas you can see on the weekly, on the euro against the dollar, we've been in a sell now. What's that say on the fact check spreadsheet? It's line 14, so let's play with that a little bit. A little bit. And right there, that's line 14. You can see 10 weeks in a sell. Looks like easily 11 today with no problem. And 3 days in a buy. But you can see right there, it's been in the sell for a while. Back in, what is that? The 9/28. So it's back in late September. And I say these things every day. I don't always pay attention to them, so I just repeat myself, and I don't mean to. It's just that we're just identifying what we see at the moment live. It just happens to be what it is. So you can see here, the euro kind of trapped, down at the bottom end of the range. We're looking at this product, and we're seeing a range. We think we see a range now of what we really think the range is right there, that black dotted line versus the black bottom line of the histogram. The Fibonacci sequence. We Fibonacci'd this. We had a conversation about Fibonacci one day, and we ended up Fibonacciing it. And I think it's well worth watching, because we've noticed how it adheres to the different percentages. And obviously my math is, as I always say, my math is ahead of the Fibonacci sequence. So it's a prelude to the Fibonacci sequence. So it's it's gives us insight even more, and you can see how it tried to get down to the, what is that? That is the 0.23. It missed it by about 30, 40 pips. I think we looked at that yesterday. Saw that it got down to 80 something, and the line is 40 something. So it's like 34, 35 pips. It missed. It bounced back up. You see our math started to turn here. You see how the way it curved right there with the Fibonacci sequence as it got near it and started to move up, and next thing you know, it goes up in value, and that is what's going on there. All right, what else can we say about that? I guess not much. Let's take a quick peek at it on the J4X to see how well it correlates today, as we always do. We look at the J4X, watch the indicator that we develop for traders that that don't have the opportunity to utilize Doc's math more than just during the webinar, and it shows you there they're trying to keep it in the buy, just like it is right there. It's in the buy, but that weekly is overwhelming. And let's take a look at J4X's view of it on a weekly basis versus a daily basis. And there it is. It's loading up. And while I'm here, let me do this too. So send. Let me get rid of whatever Robin was talking about so I don't forget. There he is, number 16. He be gone. Let's see what that is too. Okay. Yeah, interesting. Alright. So, number 16, and he be gone. Alright. And there it is. You see the same situation. Long drive down. Where's that? That is in, what is that saying? That is September also. It started doing those reds in September, just like our weekly sell, and has never one time it tried to perk up, but it didn't get through the line, as you can see here, so it's matching up very well, the weekly. All right, let's see, what else can we say about the euro? I guess that's about it. Oh, I saw, you know what I want to say? It's a little diverse from the conversation, but they had this article out this morning about, they called them unicorns. And what they were is they were billion-dollar startups, successful companies that start. And England, which is, I'm always kind of pro-England economically. I always keep on saying that they're much more of a powerhouse than the markets treat them. Have more unicorns than everybody, and almost just as much as Europe in general. And basically, what was it? It was Switzerland had half the amount of unicorns as England, and Germany basically almost had half the amount of unicorns as England, and the two combined together just beat out England with unicorns, and what they are is billion-dollar startup companies, and it showed that overall, England, for its 70 or 80 million people compared to the 300 and some odd million or 400 million of Europe, is so much more a powerhouse financially, of new growth and discovery and so forth. As much as they seem to be screwing up dramatically under Boris, wake up! You're going to get booted out of office if you don't clean up your act. Everybody voted for the Tories, thinking that they had some sanity, and then they joined in with all this crazy COVID stuff and being very strange. But even so, the amount of unicorns, as they call them, startup companies that are over billion-dollar companies, are still, England is really number one out of the whole European community, and by large numbers, almost the same amount as Europe itself, which is pretty bad. That's a bad thing. Europe should be like twice the size or 3 times the size of England when it comes to startups. Not almost identical in size. That's a percentage-wise, that's dramatic. So, and that is that. Now let's jump over to the cable. Now that we've talked about it, let's see what the sterling is doing. Seems to be playing with that bottom end of the range. Let's take a look at it over on the Chicago Quant. But I thought that was a really interesting article. Oh yeah, look at that thing. It's adhered to what we think is the bottom end of the range. What the Fed wants is the Fed gets. You can see here we've been in that daily sell for a while. What's that? 16 weeks, 16 days, 15 days, something like that. What's it say over on the fact check? Let's just take a look and see. Yeah, 15 right there. You see 15 days in a sell and 5 weeks in a sell. And you know, it doesn't, the weekly doesn't, it's curved, but it's not exactly trying to, you know, change. And you can see here on J4X the weekly is still just heading down, same game. And then when we go and look at it on a day-to-day basis, bang, same thing, long ride down, riding hard. That's it, talking cowboy here. Middle age, how you doing? I wanted to say ride it hard and put it to bed wet. And that's when you don't groom your horse correctly as a cowboy. So in other words, you're in such a rush that you rode it hard for whatever distance you had to get to, and then you jumped off it and went to do the next thing you had to go do to get there that fast. And so we used to say that when you're being irresponsible, you ride it hard and you put it to bed wet. Could you pull up the weekly chart of gold on J4X? Sure. Right there, there's the gold. Let's put the weekly in. Oh, no, do that again. There's the gold. Let's put the weekly in there. There it is right there. And we got 3 weeks in the sell there. You know, it's been pressing down, and I think we're flirting. I can say that pretty comfortably. We are flirting. We are flirting with. Where is it? Where's it at? Right. That's gas. With a weekly sell this week. It's been one of the stranger situations we've called. You can see we've been in a daily sell since back to 11/19, and we are flirting. We've been in such a strong move on the gold. You know, it went from what's that, 1760 to almost 19, right? 1873, and this is the Feb contract. So you know, it almost hit 19. Didn't it hit? What was that we did with you? You were long gold, and I think he said try to ditch it in the, you know, the 1850, 1875 area, wasn't it? And it got up to there in the deck contract. So I think that's how that was. And so you can see here, this has been one interesting thing, this slam down right there on the 19th. Let's see how it looks on, where's that mouse? Right there. Yeah, you can see it's like a gap there. Now these are hinkies, so it looks a little odd, but let's go look at the 19th on a daily basis. See, it was that strange gap down on the 19th. There's November 18th. Yeah, so it was this, that slam down that really messed up our weekly. At least the daily kept us out of the trade. That's the thing. You know, we were in the sell from that, so that's all right. You know, we flirted, you know, with that buy. The buy was I'm not sure what that issue is there, but it was a buy in the deck contract. And so, you know, it was in a weekly buy in that, and it was a great run, and it got us out on the top, but it wouldn't get us short. And I don't blame it. You know, I have to believe that, you know, the underlining, what could I describe it as? It's a metaphysical thing, my math. And so, the underlining pressure must be the upside. And then what it did is it took 2 days. It took 2 days to do that. They took it down from 1860 something, right, in that daily sell, 67, right, to in just 2 days, it took us to where we are now, 1786. So it took us down 100 points basically, almost, you know, like 89, 90 points. And we've been basically playing, you know, when you put one of those cute little lines in there like that. Let's do it this way. It's probably easier. We can leave it in there. So when you put a line in there like so, and why don't we make this like white dashed or something like that, and leave it in there for a while. ever since just that drop. You know, it pretty much has not really gone anywhere. You know, it went up, it went down, it went up, it went down, it went up to the line again, went down. We're down again, and we've been in the daily sell. It refuses to go into a buy. You know, so it's, you know, it just keeps on fighting that. And now we got the weekly over here trying to get into the sell. And so you can see J4X was catching that flavor. That's what's so nice about the two battling stochastics, the fast against the slow. They are more accurate together. They're like, I guess you could call them like a binary stochastic. When you do a battle with a binary stochastic, just like a binary element, where you take two elements and neither of them have any real effect on anything, you put them together and they can be enormously explosive or enormously adhesive or enormously corrosive, or the two elements put together make it a whole different situation. In the case here, MACD or RSI or any of these things, the moving averages are so weak compared to two RSIs, a fast and a slow, that it just has so much more insight. That's why I use a stochastic to smooth out my formula, because it enhances it even more. Aha, okay. They renominated Powell there. Okay. So, we were saying at the time, when we went into the buy, what was that? Back in the 1775 area, we kept on saying, offer them out there at 18.5, 1875. Because, we thought it was going to be a short-lived adventure. Because the Federal Reserve does not and will not allow this complex to be strong. Because, remember, back then they were fighting the idea that there was inflation. They didn't even accept that there was inflation. They referred to it as transitory. Someone this morning tried to confirm that it's still transitory, but then admitted that it won't go back down to 1.5. It'll go down to like 3.5 or 3.25. So I mean, that's not transitory. That's still inflation. And then I just shook my head at that. Just it's amazing that they let people run money like that, but they do. Anyway, so that's the gold situation, and now what we'll do is we'll jump over to Turkish Lira, if no one cares about anything. But if you do, we can go look at whatever you do care about, because I care that you care. We all care. All right, from there we go to the Turkish Lira, which is, where is that? Right. It's around here somewhere. There it is, Turkish Lira. And let's get it up on the screen there. And then you can see here, where's that? Right there. You can see it's at the all-time highs again in the dollar, heading for that 14 now. And you can see it's been in a daily buy for a bunch of days here, I guess. Did it sell that day? I think it did, didn't it? Yeah, see, it was minus 0.2, so it went into a sell for a day. I thought we had the line there. I thought it was in there. And it just jumped back into the daily buy the next day anyway. Unfortunately, I don't think that story is over with. That's the sad part. I myself am cheering for the population of Turkey to have a better life financially. So, they keep on devaluing the inflation. Wow. It is what it is, I guess. All right, let me save that. And then let's go over to the euro and see what it looks like in the euro against the Turkish lira right there. And I don't think it did. It went into the sell there too that day, and then now it's back up. And you can see the all-time high was back about 6 days ago or 7 days ago at 16.33.9, almost 34. Today it's trading at the second highest point it's ever been at 15.78.8 or 79. Yeah, so that's the second highest ever right there. And that spiky day, I guess they replaced their Fed chairman got replaced right around there, or something like that. And let's see what else we got going on. Let's take a look at it on J4X. right there. There is no letting go there, is there? And then obviously Doc likes to remind you all that I kind of think this has something more to do with not trying to sell assets, but to keep on doing trade with the European Union. That's why I think the euro is a so much better product than the dollar. When it, the euro Turkish lira versus the dollar Turkish lira. So I think that's pretty much what it really comes down to at this point. I think I'm gonna have a sip of tea. Let's have a sip of tea. We've been yakking our little hearts out. That's good. Now, let's see where so we're at the Turkish lira, so pretty much at the end of the road there. What else can we say about the Turkish lira? Not much, really. Too bad they don't have a nice liquid option market. That would be a blast. Now let's go over to the Canadian, right there. Canada. Oh, Canada. There it is. You see, Canada is the daily sell for 4 days, and now it is flirting with the buy right there. And don't tell me it's going to go to the top of the range again. And you can see we're in that weekly, and the weekly did curve right there. But it does seem like it's trying to play with the range on the upside. You see there, that's where it went to the weekly. It was in the daily buy from there. So this whole ride was in a daily buy until just recently. And I'm not sure what else is going on there, but nothing that would jump out at us besides the technicals telling us. And again, traders, it's the end of the year. We are down to less than 20 days of trading. Somewhere is out there. Today's the 10th. So let's see, the end of the month is the 31st. Let's see, let's see when the weekend is. Yeah, so Friday. Okay, this is going to be interesting. So we have 3 full trading weeks. Well, Christmas is on Friday. No, Christmas Eve is on Friday, so they're probably closed on Christmas Eve. So, and then New Year's is Friday. I didn't even look at to see what the trading thing is, but you have all of next week. You have at least 4 days of the following week, and you have at least 4 days of the following week again. So, good solid trading. Was that 5, 4, and 4? So you have 8 and 5 is 13. You have 13 solid trading days to be able to do whatever window dressing and adjusting and so forth you want to do to your portfolio as a hedge manager or hedge fund or a mutual fund or whatever, So we see here this little strength here, and I don't think are we seeing it in the oil sector? Let's just take a look. Let's see. Let me entertain you. As you can see, first of all, gold and metal. We just looked at that, and it's not, it's sideways. Look at that. You can see this again. Metaphysically, you can see we are trying. This thing is trying, and you can see now we're also at the same time flirting with a weekly sell situation. Who knows? It might go into a weekly sell and a daily buy, and we'll be stuck in more neutrality. In the end result, the math will be right. It may be weeks upon weeks that we have to put up with this, but it'll be right in the end. It always is. It's very rare for it not to be. I can tell you over a 40-some-odd year period of using it live, once or twice I think I can say that it has not been. And even then it catches up and gets you close to your situation, very close. And then obviously then it takes you to the winning side after that, so it doesn't really matter. Let's see, what am I looking for here? So that's that. Now let's go take a look at we looked at it in gold. So let's go to the energy sector on J4X. And that's it right there. And see what they're doing when it comes to the energy sector side of it. I think it was flirting with a daily sell today, oil. Yeah, it was. It still is. See that right there? It's just underneath 23 right there. And it's in a weekly sell. It's been in a weekly sell since the 80s. So, you know, we went down to the 60s, low 60s, I guess you could say. What was the low there? 63 and change. It's the Jan contract. It's trying to lift up. It's actually up for the day itself, day over day. Our math is trying to roll over, and the weekly is trying to curve up. And you can see the same situation over here. You know, it's been in a buy. It's starting to curve down and getting a red hanky right there with that weakness that we see right there. So that is the action in the energy sector itself. All right. Anybody have anything they'd like to say or see or do? I'm going to do more tea. Let's do some more tea. There we go. So that is what it is. I think we're going to jump over to, we'll go back to the metals after we get done the last 4 pairs trades. So let's go take a look at, where's it at? Let's put the South African Rand up there. And due to the fact that gold seems to metaphysically try to lift here, but at the same time giving us clear information not to be in any position whatsoever at the moment. We'll see what the Rand is doing, and I would assume the Rand might be turning up too. No, wait a minute, I bet it's turning down. Let's see. Let's see if it's turning down. Let's see there. No, it's turning up. So, yeah, I guess that makes sense, doesn't it? I don't know. I was saying what? It might go into a daily buy after it comes out of this sell real quick and close in a weekly sell. So, yeah, I guess that would be the logic, is for it to try to push up. Again, end of the year, window dressing, and I try not to take any of these moves too seriously. And then when January comes along, you know, you got funds trying to dollar cost average in, or they decide that they're going to liquidate. You know, they're going to like, okay, let's get out of Dodge. Let's not, you know, no, I don't know. With quantitative easing going on, how can anybody take any of this too serious? They're going to find a way to take it back up again, not counting the fact that Mr. Biden is trapped into trying to borrow a bunch of $1 trillion more. Now, I'm not even giving him a number. It could be $4 trillion, it could be $5 trillion. I don't know. He wants to spend $4 or $5 more trillion. And so, you know, you're getting all kinds of mixed messages when it comes to the level of responsibility when it comes to finances across the planet. All right. As I take a snack and bite on it, let's see, what else can we say about that? I guess that's about it when it comes to the Rand. I don't know, this is going to be interesting. Is this thing going to push itself even higher and higher? Are we going to see sloppy gold? Or are they going to finally start to lift gold? I look at it sloppy going down. I really do. I really have a hard time with the metals complex when you have anywhere from 4 to 6% inflation, which is going to be interesting this morning. They're hoping that this number... Oh, I know what I wanted to do. I wanted to look that up. Let me see. And let's show you what we're looking at the same time. But I did want to see what Dukascopy has to say about the inflation number this morning. Let's see. Where's it at? Right here. Let's see. Dukascopy. I know I have it parked in here somewhere. There it is, the economic calendar. There we go. Let's bring it up on the screen. There we are. Let's bring it up on the screen. There we are. So here's the U.S. CPI. They're going to see, and what are they expecting here? And they have what? There's 1 high, 2 high, 3 high, 4 high. 4 high statistics out of 6. So it's definitely going to kick something, that's for sure. That's the rest of the day, and then it's done. So let's take a look at one of the numbers and see what they're thinking. So the month over month let's see. Dukascopy says consumer price index measures. Okay, so that's not it. Let's see. Let's try another one. Let's see if we move this a little bit like that and go back. Whoa, I didn't want to do that. All right. So where do we do here? Let's go back to the economic calendar. There it is. Today. I know that I heard some traders talk about it year over year. Are they looking at that? What's the description? Historical values back. Oh, okay, there it is. It's on the side there. Matter of fact, I don't even see it. Actual and forecast. They're not even putting them in. Oh, that's interesting. What's that all about? Let's see. There must be something in here. Let's try the year over year again. Historic values. There's a chart. That looks interesting. Are they projecting up? Is that what that is? That's November. I guess that's what they're doing. They're projecting the number to be higher. Right? I guess that's what they're doing. Oh, there you go. So, what is that? Okay, so there you go. It's actual right now, 6.2. Forecast underneath it. See it? It's in gray. 6.3. So they're thinking it's still going to lift up. I heard something like that. And then I hear a lot of speculation that this is the top. We'll see. Because I guess what the January number will be really what's kicking out. So in other words, what they do, traders, is that when Jordan was asking about fundamentals, what they do is they take the CPI and then they put the PPI and they put all these things together. And so they have a general idea what the inflation number will be at the end of the month. Because I think the inflation number comes out the last week after Christmas, I think. And so they'll have a good idea what it is, but everybody will have their eyes focused on the January number because they're trying to say that we're starting to see a topping. They think one analyst said that the delta is diminishing. I don't know how they can say that, but anyway, because we watch delta just as much as everybody else does, so I don't see any diminishing at all. All I see is stabilization. So they're actually saying that, oh, okay, yeah, the momentum is dying, and let's not worry about it. It's going to start heading down now. That's what they're saying. And I go, don't work that way. But that's the way they're playing with their numbers. They're looking at the rate of change and the delta, and they're saying, okay, because now it's getting to the top from 6.2 to 6.3, the momentum is decreasing. So it's probably topping out. I say, no, that doesn't mean a thing in my mathematics, because my math does it totally differently. So, all right, and who's more accurate, me or them? Me. Me. All right, let's go to the ruble and see what's going on with ruble. Looks like Mr. Biden and Mr. Putin have come up with some type of thing that makes it calmer. Not exactly diving down or anything, but at least they're not ripping through the roof. But we're still in that weekly buy, as you can see right here. Doesn't seem to want to let go there, and we're not even touching the time manifold, so not much of a story there. Now let's take a look at it over on the J4X right there. There's the ruble. And you can see it's been pressing down the same way like it is right here, just pressing down. From there, we drift over to the Mexican. No, we go to the yen. Let's see, we look at dollar yen right there. There it is. Who is it? 47 hasn't come in and asked about the cable yen lately. Where are you at 47? I don't mind looking at that. Just pop in. We'll go look at it. I might go look at it without you. Right there. As you can see there, the dollar is still firm against this. I guess it pushed it into the sell yesterday. Let's see what I have on my fact check. Yeah, pushed it into the sell yesterday, and now we're going to be flirting with the buy. And we're in 3 weeks in a weekly buy, and it's trying to lift back up again anyway. All right, now, what's the next thing? Let's take a look at the Mexican peso. there. There's the peso. And it's kind of doing the same gig. It's slow drift down, but staying very comfortably in its weekly buy. Doesn't seem to be wanting to give that up. You can see the RSI. Someone asked us about RSI and comparing it. So we leave that on there just for the sake of it. I don't pay attention to it, but you're welcome to stare at it. And now I'm talking about it, I'm looking at it, and it did curve down with our math. So that is cool right there. Look at that right there. The weekly and the daily it curved together. Let's see what it's doing. If it's matching, what's it following? Properties. Yeah, so it's following the daily. Let's see what it's doing when it follows the weekly. See how it acts there. Curved with it too, right there. All right, and then that is the last but not least. That's it. We're done. So we're done the 4 pairs that we do on the second side of the 5. Is it 5? We do Swiss, Euro, Cable, 2 Turkish Liras, that's 5 right there. Canadian is 6. So we do 10 currency pairs. And then if anybody wants to see anything else, then we jump into that. Now I want to see Gbp Jpy. I'm interested to see what it looks like, because I find it fascinating. It seems to be a really good trender. I think I labeled something a couple days ago in our webinar, how minor and major pair trades trade a lot alike now. You can see here a daily sell for 2 days, and the weekly is turning up. You can see that strength right there. And did it go into a buy there? It went into a buy there, stayed in a buy there, and went into a sell there. So it went into a buy here. Let's put that in. So next time 47 it says, hey, can we look at this? And I went back into the sell there. And let's save it. There we are. That's interesting. All right, from there we're going to go over to the metals complex, see what's going on. We'll see what silver is doing, and we'll take a look at the energies, check out the back month oil versus the front month oil, look at natural gas. Natural gas has been kind of firm. We can get rid of that. And yes, traders, on that fundamental thing, they will put all the numbers together and they'll give us an inflation number. But most analysts will be right on top of it because they'll have pretty much all the numbers at that point. So it won't be a surprise. So January and February is where the game really begins, especially the end of January. So they might be strong for the first couple weeks of January. Anything's possible. We have seen. We'll go to the stock indices. And I'll tell you what I have seen over the decades. But let's get to the metals first. Let's see what Mr. and Mrs. Silver look like. There's March silver, still pressing down. Tried to get into the buy, but we had the red dot, didn't do it. We've been in a sell since up in here in the 25s. It's been in a daily sell for that whole ride down. Then we went into the weekly sell on the close of that week, and we might have even been in it at the beginning of the week. We don't know where the number was, but probably right around here somewhere. End result is it's been smasharoo. Yeah, they don't like the metals. Those metals would confirm, if they allowed the metals to go up to what we as traders think they should be, not what the central banks manipulate it to be, it would be a lot higher, double the price as far as I can tell. At least double the price. I mean, we went from 1.5 inflation to 6, so you would think that they could make gold, I don't know, 4,000 an ounce, silver at least in the mid 50s, something like that. But it doesn't seem to be working. There's no fundamentals moving these markets. Let's see, let's take a look at copper. Copper slid into a sell yesterday, and at one point this morning it was pushing up. I guess we can remove that at the moment. It was above the 0 line. Now it's back below it. We are in a weekly sell from here, from the 450, 445.50-ish area. So it's going down to the 420s, bounce back up to the 440. Maybe it's going to go back down. And we did identify it that it does seem to be stuck inside a range of between $4 and $4.60. The silver market. I'm sorry, the copper market. So they let this trade at all-time highs. You know, this is pretty much the all-time high area. I think $5 maybe. Let's take a look at it on J4X. I think we'll take a look at silver too. Let's do silver real quick, and then we'll go look at copper. But I think copper is like at the high end of its range for months upon months now. That would mean, like, you know, if it was, you know, they I guess they don't. I guess the best thing they can do is pretend that it means nothing when it comes to gold and silver, and then the natural instinct of the marketplace for, you know, all these electric thises and electric that's, they need copper. So now let's take a look at copper right there. And I think we are. I mean, I think it might have made $5, right? Did it make it $5 at one point? Yeah. Got up into the $4.80, $5 area, you know, 4.90s. So I mean, for us to hang out in the 4.40s, 4.50s is not that bad. That's a, you know, what is that? That's a, I want to say it's like a 15% drop. Imagine if gold was only 15% off of its all-time high, which is what, $2,100, right? So 15% off of that would have us trading in the you know, what is that? 15% of that would be, I guess, are we there? We might be there, really. 15% off from all-time highs would be, I guess it would be like 19 and change. Instead, we're trading at basically 18 in gold right now. Or are we in gold? Let's go back to gold real quick. Yeah, we're under 18. So maybe it needs to bounce going into the new year, just up into the 18s again. So middle age, you might get that second bite of the apple. If you binaried it, take off the top. Even with it playing around, since it's an option, you know. If you didn't binary it, ouch. All right, now let's take a look at, where was we going? So I did the copper. Oh yeah, and for silver, imagine if silver was off its all-time high of 15%. Silver's what, $50 or something like that, all-time high? Let's see if we can put a weekly in there. Or let's, better yet, let's do a monthly, because it's been a long while since it saw all-time highs. And that's the $55 area, right? Or that's what I'm trying to figure out. Was it $55 or $50? It went up and took out the all-time high. I remember that much. Yeah, so last time it tried to make a run was there to the 28s, but the all-time high is up in the, you know, like 50, 51. So 15% off of that would be 35, 40. You know, like 42. We're looking at 22. So no, the gold and the silver are not matching up whatsoever to the way copper is holding its price. And again, you know, good reasons. Money managers in funds have their manifesto that they incorporate with, and one of them, parts of the incorporation always talks about the price of gold and silver. So they try to keep it all in line. So that's a fun. If you want to look at any fundamentals at all, traders, the fundamentals really is look at the manifestos of the funds, and then you know why they're buying and selling things. I know that's something that a lot of people don't realize, but when they incorporate, they will follow a good part of their manifesto. That's why there's black pools now. They're trying to hide when they do those transactions, and the Securities Exchange Commission and the Commodities Futures Trading Commission love to accommodate that. They allow them to hide things that they're illegally allowed to do. Now, they're not legally allowed to do. It's illegal. They're not allowed to hide transactions, but they let them do it. They let the black pools function. That's because the Federal Reserve says to do so. And if the Fed says, then they do. All right, from there, where do we go? Not there. Let's go over to, I guess we'll take a look at did we look at the Did we go deeper into the metal? I guess we are. We looked at copper, we looked at silver, we looked at gold. Now let's go over to the energies. We'll take a look at natural gas right there. And there is nat gas. It's been perking up a little bit here. We're not really getting the cold weather. We're seeing, maybe, and this is Jan contract. This is going to expire soon. And so we're going to be moving into February. In fact, we probably need to start looking at February and see where Feb is. Let me see where the Feb contract is. Just to give you an idea how the price ratio is there. And February natural gas. Feb's trading at it's discounted. It's trading at 370.79. This is trading at 82. You can see it over there on the right. It's at 82.60 right now. So you can see that. See that right there? So they're discounting February's contract. And then March's contract is trading at 370. And April's is at 364. So then they discounted all the way down to June. Actually, no. May it jumps back up to 366. June is 370. July's 375. And August of the summer of this year coming up in 2022 is trading at 378. And matter of fact, the October contract of next year is at 380. And November is at 390. And December contract is trading at 411. And January is trading at 420, and then they start to pare it down again. It's 407 from 420 in February. In other words, figuring the season's come to its end. Middle Age says USDA report had little impact on the grains yesterday. Yeah, I remember seeing some action, but didn't really see a lot. You know what I did see, which is really interesting, is let's put it up there. Soybeans. Soybeans seem to have some life to it, whereas wheat went into a weekly sell last week. There it is, soybeans on J4X. So we're seeing some strength there, and you can see it here too. See, it's trying to come off its lows. Whereas, let's see, where is that at? Let's put it here. Right there. Yeah. It's opening up now. So let's take a look at soybeans on Chicago Quant. It's showing some life in it. And I thought it was kind of curious. I mean, everybody's planted wheat everywhere you turn. You see wheat everywhere. Matter of fact, I'm hearing some people are growing barley too. And matter of fact, I wanted to look on the. I'm glad I said that out loud now, and you mentioned it. Let me see if I can find the barley contract. I wanted to see where barley's trading. Rough rice, Canadian, Western barley. That's it. Okay, let's see what barley's trading at. So barley. Oh, there's no data on it. Interesting. So they're not trading barley anymore? That's not normal. Let's see what they say about oats. Now oats, oats is trading in the 7s, and the contract falls back. It goes from 719 on today's deck contract, which is getting ready to expire, to the May contract is trading at 7, and December of next year is trading at 536, down $1 and like $1.70. It's a big drop in back months. But there's no barley at all. Well, they must be doing a force de jour thing or what? So barley doesn't exist. I guess they've just stopped trading the contract. No data. Huh. Interesting. Chicago Merc doesn't have barley contracts anymore, I guess, or the Board of Trade, I guess. All right, so you can see here, there's wheat. And wheat went into a daily sell yesterday. And you can see it's trying to turn up today. Oh, and that's July wheat. Okay, that's July red wheat. Let's just take, check this out. Here is March wheat. It's been moving down, and it went into the weekly sell last week. Whereas red wheat, Let's take a look at March red wheat. There's March red wheat. Is flirting with the weekly sell this week. And it's been in the daily sell way back here for way more, like 2.5 weeks now it's been in the sell. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 full days in a sell. So the front month contracts are, I guess, spring wheat. That's the new crop. Really, is it really? I guess May or June is really the front month. I guess that's the new crop. So July wheat, I guess that's why we're seeing July wheat. Let's see what July wheat is. So there's July red wheat. It's not acting that weak from it, just one day in a sell compared to the other. And it's in a weekly buy and not even caring. Look at that. And that's the new crop for sure. And then let's take a look at white wheat, Chicago white wheat right there, July. And that just went into a sell yesterday also, so it's not feeling it. Oh, and it's flirting with the weekly sell too. Okay. We'll see how well that holds up. All right, I guess that's about that, isn't it? I'm glad you mentioned that because I wanted to look up barley. I've been wanting to look up barley for a couple of days now. Middle Age says 1810 would get me back into the profits in gold. You know, I would not be surprised that we go into a weekly sell and it goes into a daily buy. In other words, it does the flip. Let me just go back to it real quick. Wouldn't surprise me at all. I mean, you know, this is just me guessing the way the math has been acting. But it would not surprise me to see that and you get your 1810. You can see here, it's, what's that? The high there is 1811. You can see here the low was 1805. So if nothing else, when it gets up to 1810, throw a binary on if you're not in a binary. You know, in other words, sell the top. I was hoping corn would hit 6 yesterday. I don't think it did any. It was firm, yes. I think corn was very firm. Matter of fact, I'm seeing that. Let's take a quick look at corn. And then we'll call it a day here. We'll call it a week. There's March corn, yeah. March corn was at its high of about 3 weeks or 2.5 weeks. It got up to 93. It's a little lower today, but it's been holding up. It's been in a daily buy for 3 days. This is the 4th day. And it's not giving up that weekly signal. You know, and this is what? This is March. So this is not new crop. July is not even new crop. That's old crop. Let's take a look at, we have some clients that are looking at this stuff. So we have a couple of choices here. There's September corn. September corn is lower than March corn, which is surprising. You see there, it's trading at, let me throw it up on the other thing, which is even easier to talk about. Right there. Okay, there we go. And then let's go to the corn crop. There it is. So corn, so December corn, which is pretty much expired, it's 587. March is at 89. May corn is at 90, and then July corn is at basically 89.5, so almost 90, and then it drops off. And the back months, you know, it's not really, you know, new crop. I guess there's no real clarity yet of what new crop is. But I'll tell you this, they can grow corn pretty easily. We got 220 some odd bushels an acre around here from it, so not bad. You know, it was very productive and very hardy. So, all right, traders, catch you Monday. TGIM. Thank goodness it will be Monday. And we will see you all on the flip side. So this is the singing trader, Doc, saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, have a safe and smart weekend. Ta-ta for now.